occur. For instance, we've looked at it and we'll detect 99% of the cases. But things like how well will the virus respond to current treatments, that takes people actually being studied, studies being approved and run. So something like that can take several months. Obviously, in the next few weeks, we'll get more of a general idea of how severe the disease is, Omicron is, how quickly it spreads, and we'll get some news about are any tests failing to catch it so that people will know, do they have to choose a certain type of test, or are they okay just getting whatever they're used to getting?
All right, so we've just got to be patient here. In the meantime, just be prudent, it sounds like. Tell us a little bit about the work that you guys are doing. You have a COVID-19 test and detector. From what I understand, at least on your website, it's not yet cleared nor been submitted to the FDA for authorization under the Emergency Use Act. Is that correct?
That's correct. We're just starting our final study with patient enrollment now and hope to submit to the FDA in early January, so maybe be out on the market in late February or at least early March. And it's basically like a massive lab PCR that you would find in a hospital, but in a tiny little box, and one that gives you results in about 30 minutes or less as well.
How much does it cost, or how might it cost?
So the device itself, and we can only give ranges per FDA regulations, it might be kind of in the $200 range plus or minus. We haven't made any final decisions. And then the device can run up to about 3,000 to 5,000 tests in its lifetime. And how much each test costs is something we're still trying to determine. We want to bring down the price as much as possible to increase access, but obviously there are costs of manufacturing involved. So we're thinking probably in the $50 to $75 range, but that hasn't been decided. And again, we can't really give out any definitive numbers according to the FDA.
What were your thoughts last week when you heard President Biden say that he wants insurance companies to start cover at-home testing starting in January?
So, obviously, as a company, you get excited about that. As an emergency physician who saw hundreds of patients and many very sick, I think this is a great idea because if we can really interrupt the spread of COVID, vaccination, we all hope that everybody will get vaccinated, or at least, that over 70%, 75% mark, and COVID will just go away and, we'll be saved from it. That's not been the case. So the way we're going to stop COVID from spreading with each wave is to identify as quickly and easily as possible when somebody has an infection. So, for instance, I want to go to a party with people. I test quickly, easily, accurately, and then, I find out I'm positive. Oops, I'm going to stay home. I'm not going to infect anybody else. So if we can get to that point, I think it's really going to make an impact. But costs and access are both significant barriers, so people need to be able to test at home, ideally, and be able to afford to test.
Yeah, no, so many of the conversations that we have certainly have to do with the ability to affordable and accessible testing, certainly going forward. Dr. Michael Blavis, he's Chief Medical Officer at Anavasi Diagnostics. He's with us on the phone in Atlanta. What do you think about this? You talk about this a lot, testing.
Gosh, well, we do weekly tests for our son who's in nursery school as part of the, the tuition there. And we forgot his saliva sample last week.
And then what happens?
We just have to give him an instant test at home. But, the PCRs, they're better tests.
Yeah, no, it's a good point. All right, we're going to continue to track it, of course. Coming up, we're going to also talk a little bit more about the markets. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So just about 90 minutes to go until we wrap up the trading day, first trading day of the week, and we're going to count down to the close. Bloomberg Radio, TV, and YouTube will join our TV team in just a moment.
Yeah, quick preview. We've seen quite the reversal as far as the NASDAQ looks, higher by 1.2%, was wavering between positive and negative territory throughout the day today.
If you fall asleep on the wrong day, you're going to be like, well, nothing happened.
I know.
Because you just, things like seem to go back and forth, up and down. That's a market. All right, let's get to it, though, with a check on those markets. Here is Doug Krisner.
I think it's fair to say, Carol, the mood is pretty upbeat. We've had some very good news on the Omicron variant coming out of South Africa. Apparently, hospitals there have not been overwhelmed by the latest wave of cases. So we're seeing a recovery in stocks. Energy, financials leading the S&P higher right now by something greater than 1.5%. The Dow is up 2.1%, and the NASDAQ comp up about 1.3%. But look at the small caps, too, rallying with the Russell 2000 ahead by 2.6%. Cathie Wood's ARK ETF is snapping up shares of DocuSign during the recent 42% nosedive that we had in DocuSign shares. Right now, the stock is up about 4.7%. And the SEC has reportedly opened an investigation into Tesla. Reuters saying this probe really centers on a whistleblower's claims on defects in the company's solar panels. Now, this stock has been bouncing around, though. Right now, Tesla shares higher by just about 0.2%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And right now, we are less than 90 minutes away from the end of the trading day on this Monday. Romaine Bostic here, Taylor Riggs here, Sonali Bass again for Caroline Hyde, counting you down to the closing bell, and here to help take us beyond the bell, or maybe to the bell, our global simulcast, Carol Massar and Tim Stenovic. Hey, who's counting here, Carol? This is our Bloomberg Television, radio, and YouTube audiences. Come on into the fold here. Carol's going to break down this rebound trade that we're seeing in the equity markets.
Well, first of all, we're going after value. We're going after travel. It's like the variant, we're all kind of gotten more comfortable about it, and maybe we're just watching some upbeat news, or better than, or not worse than expected, maybe news out of South Africa over the weekend. I think we understand that it's going to take 2 to 4 weeks before we really understand the impact, and so we're all kind of calming down and coming back into the market.
And when you talk about those travel stocks, you're talking about the cruise lines, up 10, 11%, airlines, hotels, casinos.
That's exactly right, Romaine. If you look at the top 10 best performing stocks in the S&P 500, that's what they are. Norwegian Cruise Lines, their airlines, their casinos, their concert promoters like Live Nation, for example.
And we just had on Bloomberg Television Eric Ripert of Le Bernardin. He was talking about just how the restaurant industry, at least here in New York, has really made a nice comeback.
Did he bring any food?
Midtown is back. That's pretty much the only thing you need to know. Good luck getting a reservation for the next 90 days. But this really does bring up a good point. And Carol, you were talking about it, of sort of this reflationary trade. And Sonali, I hate to say it, but it is a 9 basis point move higher in yield that really catches our attention as we're thinking about that reflationary trade once again.
Yeah, I'm wondering about the reflationary trade. You do see investors here still flocking to some relative form of safety here. You still have them buying CDS. You still have the VIX pretty elevated here. I've got to say it, though. Perhaps that pop in the bubble last week was pretty good. Pop some leverage out of the system means a softer landing ahead.
I agree with you on that. Like we were talking about around the table here that, maybe we've seen just a huge move to the upside, just a little bit of I keep using the word over and over, recalibration in terms of what's really going to happen into the new year. And we've had what a tremendous run. So we're certainly seeing that play out. I got to say, though, if you're an electric vehicle company, not so great today.
So we're talking a lot about the upside here. We should point out here that there are a lot of stocks in the red, and a lot of them are tied to the drug space. Of course, you have some of the vaccine makers like Moderna and Novavax lower, but we're also getting commentary now out of President Joe Biden here in the United States about a potential here to, address drug pricing issues. So you're seeing Pfizer weaker on the day, and a lot of those names in that big pharma space. So it'll be interesting to see what, if anything, the government does and whether that has any sort of material effect on the bottom lines of these companies.
And I think it's interesting, you guys, as we think about, not to take us back just a little bit, but you talk about the bottom lines of these companies, and if we are in a correction and sort of what last week's or the last 2 week, what that pullback really meant, you have to say it's Dennis Gartman that's saying you needed sort of a bear market, and are we there yet?
Gartman?
6 months of a bear market.
He's
We
looking
had a
for a bear
longer
market.
term.
But how much is that really needed? We've been so inflated for so long, and Katie Nixon, you guys on TV mentioned this. Don't forget, volatility isn't always bad. It's supposed to be normal. They've just had such a heavy hand by the Federal Reserve in these markets that we've all forgotten what volatility is.
Yeah, and I mean, look where we are year to date, too, guys. So it is hard to forget that markets in some cases go down when you're still above 22% higher on the S&P 500 for the year.
Well, it's easy also to become very complacent, right? We forget that you're right. Markets go up, markets go down. I mean, we have seen the VIX certainly pop up from some of the lower levels we saw just a month ago. And so volatility is back in the markets. Traders love it. This is how they make money, right?
That's what I was going to say. We're a month and some change already away from bank earnings, and I am looking for that money being minted at the rates desks and at the commodities desks this month.
And we should point out, we are still keeping an eye here on what the president is saying. He's now talking about his social spending packages and a wide variety of bills that he wants passed and that he seems to say are still needed here to support the economy. Of course, that'll be a topic of big debate, particularly once we get to the next Fed meeting where they've got a big decision to make here about the pace of tapering.
Yeah, it's going to be a huge meeting, and we do wonder if they're going to have to wait for another jobs report, right? Just after Friday's jobs report, whether or not they will, give us some more clarity about when we start to see rates going higher. All right, that's going to do it for our countdown to the close, folks, in just about,
that's our first countdown to the close.
That's right. Well, isn't the other one Beyond the Bell?
I don't know.
That's coming up. That's going to be live on TV and radio. We're going to be back with our TV colleagues, and we will take you beyond the bell at that point. And I'm just going to say stick around on radio because we have a good travel CEO coming up. Trivago CEO is going to join us.
All right, Carol's still talking, but still ahead.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Of course, that was our TV team. We're going to go back to them at 4 p.m. Wall Street time for Beyond the Bell, our complete market coverage.
A lot of voices here.
What do you mean?
All of us.
Yeah. Well, it's good. It comes out from different perspectives. I think about Taylor and her focus on certainly the Treasury trade. That's a key one. Everybody.
And Sonali with the banks just now. Such a good point, right? How many weeks away are we for bank earnings?
And that'll give us a good indication. I mean, we have seen record earnings throughout the pandemic. The movements in the markets is how traders make money ultimately. So they have to be happy as long as they're on the right side of the trade. That's the other thing to think about. So we'll be counting down. I did mention at the tail end of that, Trivago CEO Axel Heifer is going to join us. So we'll see. We've got a big bump in all those hotel and hospitality and travel stocks today. That has certainly provided some support to the market. We'll see what he has to say.
Yeah, ADRs right now, Trivago included in that group. Carol, those are higher right now by 7%.
But they've taken quite a beating from their highs. All right, let's get back to world and national news. Over to Nancy Lyon. She's in D.C. Hey, Nance.
Thanks, Carol. The Justice Department is filing a lawsuit against the state of Texas over its new voting law. U.S. Attorney General Merrick Garland says voters should choose their representatives, not the other way around.
Texas has violated Section 2 by creating redistricting plans that deny or abridge the rights of Latino and Black voters to vote on account of their race, color, or membership in a language minority group.
Garland says Texas gained 2 new seats in Congress after the 2020 census, but designed those districts to have white voting majorities. Meanwhile, in Georgia, a bitter primary fight could be coming in next year's race for governor. Bloomberg's Nathan Hager reports.
David Perdue, the 71-year-old Republican who lost his Senate seat earlier this year to Democrat Jon Ossoff, is challenging incumbent Governor Brian Kemp. Perdue comes into the race as a favorite of former President Donald Trump, setting up a contest over how much loyalty Republicans will need to show the former president and his false claims that last year's election was stolen from him. Whoever wins the Georgia race will likely face Democrat Stacey Abrams. She'd been planning for a rematch with Kemp after her narrow loss in 2018. In Washington, I'm Nathan Hager, Bloomberg Radio.
Senate Majority Leader Chuck Schumer is telling his Democratic colleagues that he's still aiming to pass President Biden's nearly $2 trillion economic package before Christmas. Of course, it would be competing with other priorities like raising the debt ceiling, as well as the National Defense Authorization Act. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our D.C. Bureau with World and National News headlines. Among the headlines, though, that we've been keeping an eye on, a couple that are certainly key. First of all, the Biden administration will not send any diplomatic or official representation to the 2022 Winter Olympics and Paralympic Games in Beijing due to China's egregious human rights abuses and atrocities in Xinjiang. And
this is a big deal.
It's
a very big deal.
But they're not saying athletes can't go.
Exactly. They're letting...
So it's very much a...
diplomatic boycott.
Correct.
Yeah, you're absolutely right. It does mean that U.S. athletes are free to compete even as administration officials stay home. This decision stops short of the full-scale measures seen during the Cold War and at other points in Olympic history, but still really widespread implications here. And we're going to talk more about China, too, a little bit later.
Well, we're going to check in with Andy Brown as we do on Mondays. And it's interesting, about China, talking about and threatening to take firm countermeasures if the U.S. proceeded with this. And I do wonder, this relationship is a tough one, and it just seems to get worse. And I found it interesting. 60 Minutes did a whole piece on what President Xi is doing in China and the crackdown and what it means. And it was interesting. There was a former Trump official talking about China policy, and then there was another official, and I forget where she was from, the think tank, but her father is, I think, CEO of one of the state-owned banks in China, but she also works, I think, with a university. But anyway, the point was, it was like the two different perspectives of China. What they're doing is just cracking down on what we all complain about anyway, and the society doesn't mind. And then there's others saying, well, wait a minute, no, this is China acting in very uncapitalistic ways.
It will be notable, I think, to see what athletes do, how they talk about this, if they do talk about this, if they're asked about it, and also what sponsors do, Carol, because I think that's a big part of it as well.
And that's what we're going to talk about with Andy, because, there's the Olympics, but there's also been a really big move by the Women's Tennis Association when it comes to tennis in China, where a lot of people play tennis, but it has potentially business implications. So we'll get to that in just a moment, in about 17 minutes' time. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We are approaching that all-important final hour of trading. The mood across markets today, very upbeat given the positive news that we have had from South Africa on the Omicron variant. Hospitals there have not been overwhelmed by the latest wave in cases. So we're seeing higher stocks with the S&P 500 up about 1.3% right now. It's energy, it's financials out in front of this advance. WTI crude oil, speaking of energy, up nearly 5.5%, 69.83. A lot of this move to the upside has to do with the move up, generally speaking, in risk assets, but we also have Saudi Arabia boosting the price of its crude oil. Dow Industrial Average right now with a gain of 1.9%, and the NASDAQ Composite up just about 0.9%. Talking about the relative strength in energy, or rather financials earlier, that's the function of a move up in long-term interest rates. A 10-year Treasury now at 143, so we're higher by a little more than 9 basis points on the day. Tesla certainly has been chopping around today. Right now, the stock is down about 0.9%, getting indications that the SEC is opened an investigation into the company. Reuters is saying the probe centers on a whistleblower's claims on defects in Tesla's solar panels. Again, the stock is now down about 0.9%. Dollar steady, rates are up, stocks are higher. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Not a care in the world. Just going to say.
No?
No, there's a few.
Okay.
There's several. I'll give you the list.
I'll have what she's having.
Exactly. All right. So, love this story. So, kind of them. I'm talking about Wall Street. It just wants to sell a special index just for you. This story in the upcoming issue of Bloomberg Business Week magazine. It's also today's Bloomberg Big Take.
Pat Regnier is markets and finance reporter for Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio in New York. Justina Lee wrote the story. She's markets reporter at Bloomberg News. She joins us on the phone from London. So the idea of investing in passive indexes, and those from perhaps Vanguard and others that track the S&P 500, it's been a really good thing for investors, Pat, but not necessarily such a great thing for stock pickers.
Yeah, if I think of the two most tectonic changes in investing in my career, it's been the adoption of index funds and then the shift of that to ETFs. And one of the things I found so fascinating about Justina's story was that, this is what people on Wall Street really hope will be the next step. In some ways, it has a lot of the logic of indexing in ETFs, but they think it's a way that they can preserve an ability to charge higher fees. Justina, where do you see this in its evolution?
Right. It's kind of interesting, like you said, because it has some passive elements, but it really has some kind of an active ingredient kind of smuggled into it. Because they kind of what clients start with is an index, and then they can add and subtract from that list to end up with a personalized portfolio. And we're really seeing kind of the intersection of technology as well as kind of this big personalization trend across a lot of other products. If you think about Spotify or Netflix, everywhere here. And the question is, does this same concept also apply to investing?
Yeah, it is kind of interesting in terms of, so you basically take an index and you can kind of tweak it. I know it's kind of earlier in the game, or is it? Talk to us about kind of the establishment embracing this form of investing.
So for now, direct indexing runs about $350 billion of assets. So it's still tiny if you compare that to the mutual fund or ETF industry. But we're definitely seeing a lot of big moves all around to make this the next big thing. We have had acquisitions from Franklin Templeton, BlackRock, Morgan Stanley, Vanguard even, all the biggest names kind of wanting to get a hold of this. And I think the question is whether this will kind of end up being quite a niche product that maybe you can get a bit more fees on, and whether it really will end up being a threat to ETFs and mutual funds.
Well, in our tease at the top of the show, I said, well, is this altruistic, like giving the client what they want, or is it capitalistic, or a little bit of both?
Yeah, I think there really is a philosophical question here because, the supporters of this say, even if the clients are not making the best decision, you need to enable people to make them. For instance...
Hello, traders. New order placed to buy euro. The price I'm looking to buy, 112.79.8. Okay? I'm placing an order to buy at 112.79. 1279.8. Please place your order and wait for my instructions. What I'm going to do next, I'll let you know. Okay, for time being, second order for today for euro is placed. Okay, stay safe. I'll speak to you later, guys.
How much direct indexing will cost, especially compared to some passive vehicles. I mean, the S&P 500, for example, up more than 22% this year. You could throw that into an ETF with what, like 5 basis points of a fee?
Yeah, or even less than that
Wow.
at this point. There isn't a lot of transparency in direct indexing fees, but
Okay.
Bloomberg Intelligence estimated that it's around 30 basis points, which is still higher than ETFs, where you can get almost zero at this point. So it is cheaper than your old school mutual fund, but it is more expensive than, the cheapest ETFs, which I think really is the pitch here. Somewhere a bit more expensive, but not, the cheapest of the products.
No, that's okay. It's interesting. I guess I do wonder. It's hard not for Wall Street, who's been just watching so much of the money fly out because of index funds. And I agree with Pat. I mean, one of the first things I did in my financial journalistic career was produce a mutual fund show. It was all about playing the strategies. And you had, people were just piling money into mutual funds. So it's fascinating how quickly it has evolved to the index world. Although John Bogle, bless his soul, and may he rest in peace, would have said years ago, well, this is the way to go. It makes sense. It's a smart strategy. But I do wonder about the fees that financial firms have been losing because everybody's been throwing money into index funds, and how much of that is a big part of it. And I guess, time will tell, right, in terms of performance.
Yeah, and
okay, guys, position opened at 179.8. Well done, guys. Another long position opened. Stay with me. You got the strategy. You know how we trade. If you don't have the strategy, just stay with me, and I'll let you know what we're going to do with those two positions we have for today. Okay, guys?
These have just fallen, and that's one of the reasons that this is even possible. Where do you see that kind of playing into the evolution of this? The fact that I could go on Robinhood and I could build an index. That's not a pitch, by the way.
And you're not going to do it necessarily, right?
No, absolutely not. In fact, my two Robinhood holdings are a total stock market ETF and a bond market ETF that I have just to watch that app.
And your index kind of has a ring to it.
Yeah.
Well, just
because
go ahead.
Yeah, because I guess the other thing is direct indexing has been around for a while, but it's kind of becoming a big thing because, as Pat mentioned, with trading getting so cheap and fractional shares, you can now offer this to people with much less assets. And I mean, there's still a threshold of maybe $100,000. And of course, there's a tax benefit, so it makes more sense if this is in a taxable account. But this is going a lot more mainstream than it used to be.
Can anybody do it just quickly? Got about 20 seconds left here. Justina, can anybody create their own index?
Yeah, I mean, if you have kind of quite a bit of money and talk to your financial advisor, I'm sure a lot of them want to sell this to you.
Okay, so not anybody can do it. You have to have quite a lot of money. Okay, that's what we wanted to know. Justina, thanks so much. Justina Lee, she's markets reporter. She's also quants reporter here at Bloomberg News, on the phone from London, along with our Pat Regnier, markets and finance editor at Bloomberg Businessweek. This story, read it in its entirety at Bloomberg.com, Businessweek.com, on the Bloomberg terminal, and in the new issue of Businessweek magazine. That will be out later this week.
It's also today's big take, one big piece of journalism from around the world. You can read it at Bloomberg.com.
Love how the markets evolve and how you invest evolves.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It's now 3 p.m. on Wall Street from Bloomberg World Headquarters in New York. I'm Doug Krisner. The mood today across markets really upbeat, given some good news that we had out of South Africa, where the Omicron virus is concerned. Hospitals there apparently have not been overwhelmed by the latest wave. So we're seeing a recovery in the equity space after that volatility last week. Some were calling it a case of dip buying. S&P 500 right now with a gain of about 1.3%. The Dow is ahead nearly 1.9%. And where the NASDAQ comp is concerned, a gain of nearly 1%. We've got a rally in the small cap space with the Russell 2000 up 2.3%. So in spite of today's advance, the noted market sage Dennis Gartman told us earlier he is expecting a bear market in stocks.
A bear market is required at this point. We had an expansion for a long period of time. And I think over the course of next year, he or she who loses the least amount of money will be the winner.
Now, at the same time, strategists over at Morgan Stanley were saying today the Fed has the greatest, or is really the greatest threat to the equity market as opposed to the Omicron variant. Last week, you'll remember, Fed Chair Jay Powell signaled a faster tapering of those asset purchases. And Morgan Stanley is saying for markets, tapering is tightening, and it's going to lead to lower valuations, as it always does in any stage of a recovery. Among actively traded issues, we have Tesla shares being bounced around a bit today. The SEC has reportedly opened an investigation into the company. Reuters was saying this probe centers on a whistleblower's claim of defects in Tesla's solar panels. I have that stock down about 0.5%. So with the appetite that we have for risk assets, I think we should include crude oil in there. WTI 69.75, a gain of something greater than 5% now in the electronic session, and a move up in long-term interest rates as well, with a 10-year Treasury right now higher by more than 8 basis points in yield to 1.43%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, tennis. It's a really big deal in China. Some 14 million people play regularly, almost 1/4 of the global total, according to some reporting by Andy Brown. It's been an important and lucrative market for the Women's Tennis Association. So why? Why did they walk away? And what does it mean for other international businesses that operate in China? I mentioned Andy Brown. He wrote about it in his Saturday New Economy column. He joins us on the phone in New York City. He's the Bloomberg New Economy editorial director. Andy, good to have you here again on Bloomberg Radio with Tim and myself. You write about how a tennis star may really hurt China. First of all, remind us by a story that I think it's safe to say that a lot of us have been riveted by it.
Yeah, the story is that the WTA and Steve Simon, the commissioner, have stood up for principle in China and present a rare case of a business that, has put principle first over profits. We've had numerous examples of businesses that have come under attack in China. I mean, Marriott Hotels, Mercedes-Benz, Versace, Valentino, Coach, for crossing China's red lines. And all of them have reflexively groveled and come up with these sort of trembling apologies, because in the end they don't want to sacrifice their business. In China, what happened, obviously, in the case of the WTA, you had a Chinese female tennis star, Peng Shuai. She comes out, she's making allegations of sexual abuse, assault against a senior retired leader, and the WTA back her up.
How is this different, or actually, Andy, what I want to ask you is if this represents some sort of sea change in the way that American organizations doing business in China will act? I mean, you write about the difference between this and what the NBA did just a couple of years ago.
Yeah, you'd have to wonder whether the NBA, Adam Silver would have responded in quite the same way. First of all, they came out, and it was a pretty balanced response when Daryl Morey, who was then running the Houston Rockets, came out and tweeted his support for Hong Kong. But then they came up with they sort of folded. They came up with another statement in Chinese that said these comments had been irresponsible. Look, I think the WTA, in a sense, have set a new standard for corporate behavior in China against which other companies and other sports leagues are now going to be judged. I don't think it means that, companies from Nike to Starbucks who are all making a bundle in China are going to start getting themselves all anguished about human rights in China and thinking about pulling out. Not at all. But I think it could well be the case that businesses that don't actually have to be in China, they're not making a lot of money in China, they're in a sensitive area, sensitive from a political perspective, human rights perspective, for instance, in the media industry, we could well see exits. And in fact, we are seeing exits. LinkedIn, packed up, gone, going. Yahoo, another example, right? So it is going to have an impact, I think, in some way on just about every business that is in China, foreign business in the country.
Andy, you talk with so many CEOs and leaders, global leaders, about the relationship between U.S. and China. When does walk the talk really matter? I feel like we've had so many conversations, whether it was with George Floyd or U.S.-China relations and inequities and people saying we got to do better, companies saying we have to do better, and yet I think about U.S.-China, you don't see a lot of companies, especially when you're talking about the amount of money that they can make in the Chinese market still. You don't see a lot, pulling out, even though there's some really egregious things that happen in China. So when does it matter on a corporate level?
Yeah, look, before we elevate the WTA to sainthood, it's probably worth saying that the WTA would have taken a cold, hard look at the business consequences of pulling out of China. It's not automatic that the financial future of women's tennis is in China. Ask the PGA. It wasn't that long ago that China was building golf courses all over the place, and the biggest names in golf from Jack Nicklaus to Gary Player were all coming in to design courses. Xi Jinping comes into power in 2012 and closes a whole bunch of them down. He doesn't like golf. It's bourgeois, and the game takes a big dive. And by the way, revives spectacularly in the United States just recently. So they would have looked at that. Nobody's playing golf. Nobody's playing professional tennis in China now anyway. The country is in lockdown, and it's entirely possible that tennis could go the same way as golf in China. It too is kind of elitist.
Hey, Andy, I want to bring in what we learned about Ray Dalio's comments over the weekend, because last week, after an interview on CNBC, he found himself the target of criticism. He said over the weekend that his comments on China human rights were misunderstood. So we do see portfolio managers, founder of Bridgewater, for example, in hot water as well as a result of this.
Yeah, he came in for a storm of criticism, essentially drawing an equivalence between, dodgy human rights in the United States and human rights abuses in China. And Andrew Ross sort of challenges him, and he says, yeah, but, there's all kinds of things wrong with U.S., with the United States, but nobody is getting disappeared. And then he goes off on a long riff about how this is just sort of strict, China's being a strict parent, and gets a storm of criticism, not least, by the way, from his number two, David McCormick, who evidently is weighing a run for Senate from Virginia. You cannot run for public office in China now without being a China hawk. And, a lot of this comes down to public opinion, that Ray Dalio just doesn't have the public on his side. 76% of Americans take a very negative view on China, according to the latest Pew survey.
Interesting developments. A great column, as always. Andy, thank you so much. Really appreciate it. Bloomberg New Economy editorial director Andy Brown on the phone in New York City. You can check out his column. Just head to Bloomberg.com, or also you can search on the Bloomberg. You can also sign up for the New Economy daily newsletter at Bloomberg.com/new-economy. I read them every day.
It's a great read. Definitely check it out on the Bloomberg.
Big global issues they're always dealing with.
Yeah. Let's get now to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. President Biden says prescription drug prices in the U.S. are simply too high.
We pay the highest prescription drug prices of any developed nation in the world.
Biden says his Build Back Better proposal would put a cap of $2,000 a year on what Medicare recipients would pay for drugs and would impose a tax penalty on drug companies that raise prices faster than inflation. He says he wants the bill passed no matter how long it takes. The Biden administration has announced a diplomatic boycott of the upcoming Beijing Olympics due to human rights abuses. U.S. athletes would still compete. The U.S. also boycotted the Moscow Olympics in 1980 over the Soviet invasion of Afghanistan. China is making it easier for its banks to lend money as it copes with a slowdown in economic growth, and Xi Jinping strengthens his hold on power.
She is trying to rein in a real estate bubble while local governments depend on the real estate market for their revenue, Bill Lee, chief economist of the Milken Institute, said in a Bloomberg interview.
He's essentially gotten rid of all of his opposition, and his strategy is to consolidate by telling the people of China the Communist Party is going to deliver them safety, growth, and a better way of life. And I think that he's going to tell the world, we will be a major power, handle us as such.
Lee said she is boosting China's own financial institutions, so American banks would do well to shift attention to other Asian markets. In Washington, Irv Chapman, Bloomberg Radio.
Congressional leaders announced this afternoon former Senator Bob Dole will lie in state at the Capitol Rotunda this Thursday. He died yesterday at the age of 98. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar along with Tim Stenovic. God, it feels like a Monday.
It is a Monday.
Oh, wait, it is a Monday.
It is. That's why it feels like a Monday, my
I still
friend.
feel like I need a cup of coffee. I've already had like
Okay,
two.
we got a little break after this. We'll get you a cup of coffee.
Okay, no coffee, because then I can't sleep again. Then we start the cycle all over again. Jeff Bezos.
You can blame the booster. You really could.
I did get my booster this
Yeah.
morning.
I saw you tweet about it.
I did.
I'm really glad you got it, but you can blame any sort of Mondays on that.
Okay, I'm going to take
have
you
free
up on
reign.
it. Guys.
I took a day off. the day
Hashtag
after I
booster.
got it.
Did you?
Yeah.
Well, you also had some reaction.
Yeah, well, I knew I didn't know I would because I had a reaction to the second one, but I said in case I get a reaction, I'm just going to do it on a day where I don't have work the next day.
I feel okay. I mean, I had a busy weekend, so I'm just tired normally. But so far, so good. I have to say, I am not getting on my soapbox, but for me personally, felt relieved because I have people in my life who are immunocompromised, and I want to make sure that I'm taking care of my community and my community at work, to be quite fair.
Oh, thank you.
You have a little one.
I do, yeah.
Who
Thanks for
can't
getting
get
the booster.
vaccinated yet.
Not yet.
But
Soon,
has to take
hopefully.
a lot of tests. Loves that test. All right, we want to bring you a story by Sophie Alexander. Jeff Bezos announcing $443 million in donations to climate organizations today as the world's second richest person ramps up his philanthropy. He has been under some scrutiny, I would say, maybe even some criticism. I'd go so far. Hadn't done a lot when it comes to philanthropy.
Yeah.
He's definitely stepped up his game lately.
He really has, especially as in the last couple of years, because for many years, Carol, that's right, he had done little to nothing when it came to philanthropy. But at the same time, he was, to be fair, running Amazon, and there were a lot of people comparing him to Bill Gates, who at the time wasn't running Microsoft and
Don't you
was
just
focusing
farm it
more
out to
on
people?
philanthropy. I don't know. I wouldn't know.
Wait, I didn't say
imagine,
that.
I don't know.
Could get in trouble for that. Hey, listen, I should say the most recent contributions are in addition to the $791 million he gave to 16 organizations last year.
Million,
as,
right?
Million, right. As part of his $10 billion commitment to his Earth Fund to fight climate change. Bezos has promised to distribute the full amount by 2030, so that's in 8 years?
Yeah, the 44 grants announced Monday, Carol, $130 million goes to help the Justice 40 initiative that's led by President Joe Biden's administration to fight climate change and support disadvantaged minorities.
All right, got it. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we are now about, well, let's say under 43 minutes until the closing bell. The Monday session has been very much about an appetite for risk. Want to get you the very latest as we cross to the Bloomberg Macro Squawk Desk. Bill Maloney is there. Hey, Bill.
And good afternoon, Doug. U.S. stocks are surging with the Dow leading the way. Dow is currently up 695 points. S&P's gained 62. NASDAQ rises by 167. The U.S. 10-year yield at 1.43%. Gold is down 5. Bitcoin is little changed. And transports rise 400 points. Among the main 11 S&P sectors, all were in the green, led by gains in energy, industrials, and the materials. And leaders to the upside in the Dow, Walgreens, Intel, and Visa, while Verizon led to the downside. In deal news, Jack in the Box is buying Del Taco for $575 million. And in other news, BuzzFeed opened at $10.95 in its trading debut. And Lucid said they received an SEC subpoena back on December 3rd. Wrapping things up, GitLab reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, and to get live breaking news right on the Bloomberg terminal, the function is SQUA, then the green go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Master, Tim Stenovic, and Ed Ludlow. Smile for the cameras on YouTube. Ed Ludlow. He is watching shares of Tesla. We, too. Where are they now, Tim? Because they've been all over the place.
Yeah, shares down about half a percentage point right now, trading over $8,000 per share. Bouncing around. They were as low as minus 6% earlier in the day.
And we know it's off, I think, close to about 18% from its high 1 month ago. So let's get to it, and let's get to the reasons why the aforementioned Ed Ludlow, Bloomberg News West Coast correspondent. He is there in our San Francisco bureau. So tell us about the news on Tesla today. What's going on, Ed?
Yes, there was a report by Reuters that the SEC is probing claims by a whistleblower that some of the solar products that Tesla sells had defects. Now, this whistleblower is a guy called Stephen Henkes. He was a Tesla employee. In fact, he was a Solar City employee, which was then, of course, acquired by Tesla. And in 2019, according to this Reuters report, you know, he made regulators aware of some concerns he had. He filed a whistleblower's report. He was later fired in August 2020 by Tesla, and then he sued them, you know, for wrongful dismissal, saying that, you know, he was essentially fired because he brought some of these issues to light. And you know, the letter that Reuters cites from the SEC is dated September 24, and all it says is that there is an ongoing investigation in which that they're not going to provide any more detail. So, as you said, it's kind of a severe reaction, but the shares recovered quite a lot.
Yeah, what do you make of the recovery, Ed? Any clue as to why investors kind of shrugged it off? Did the other investors come in and buy the dip? As he reported, this was a more than 20% decline from recent highs.
Yeah, so we were kind of in bear market territory, and Tesla stocks had a really rough go of it in the last 5 days or so. You know, last week when the kind of debate, or even before that, the debate around the impact of Omicron globally, you know, traders started to rethink their outlook for a Fed taper and a rate liftoff. And this is a momentum stock, quote unquote. You know, it was in that basket of stocks that got crushed. You know, when a report like this comes out, it takes a little bit of time for the market to digest it. And as I said, you know, we have very thin detail on the status of this SEC probe and no comment from Tesla, which is really normal, right?
Right.
Yeah, I mean,
just watch the Twitter feed is all I'm going to say at this point. But I mean, let's be fair. It had been on a tear. Right? So there, you know, certainly these headlines don't help until we kind of figure them out. But nonetheless, the stock had quite a run. And so you've got to find another data point that supports that run up in order for investors to feel kind of okay about it.
Yeah, and a lot of that, of course, was tied to optimism around Biden and the infrastructure bill and the outlook for demand and the world recovering from the pandemic finally, and all of us going out and buying new cars. You know, on this Reuters report in particular, remember, this is not about a probe into the car side of the business. It's solar. And in any given quarter, solar is around 4 to 6% of revenue. So that might be another reason investors are kind of taking a beat and thinking, we're not too worried about this.
Yeah, Dan Ives at Wedbush said the solar business has been a disaster for the Tesla story, and the street continues to be frustrated by this business segment. Ed, you've covered Tesla closely. What is the future of solar within Tesla at the company?
Yeah, it's interesting. You know, Tesla is a kind of a complete triumph and a complete struggle story, right? And a lot of that is focused on the production of cars, this desperate attempt to get a plant open in Germany, get the plant in Shanghai ramped up, because Elon Musk has always believed that cars should be produced locally in the markets where they're sold. The solar business has kind of had a slower liftoff. There hasn't been the drama around the story. There hasn't been this sort of intense interest. But remember, it's part of a broader shift to sustainable energy. You know, Tesla's energy storage business, according to Bloomberg NEF forecasts, right, has a really promising future, because we want to see a world increasingly where we do draw more energy from solar, also from wind and from hydro, but we need somewhere to store it, right? Solar's only good while the sun's on. Once you turn the sun off and it's dark, you need to make sure you have somewhere to store it. So solar is just one small part on the broader energy storage story, but people still see the company as a front runner in that space.
As you say, 2020 revenue about $2 billion for the energy generation and storage, about 29, almost 30 billion for automotive and services. So it gives you a better idea of that breakdown. Hey, not the only headline that you're following today, Toyota.
Yeah.
Tell us a little bit about that, Ed.
So Toyota is really interesting, right? Because it's the world's biggest car maker. It sells the most vehicles around the world. And we all wait for the legacy auto players to catch up in the EV space, right? And Toyota's kind of stuck to its guns with hybrids. You know, they really believe in the hybrid story. They still believe in it, but they are going to build their first US battery plant in Greensboro, North Carolina, in the sort of northwest of the state. They're going to invest $1.29 billion. And this is a factory that's going to take 4 years to build. It comes online 2025. But at its peak, it could make enough batteries for 1.2 million cars annually. And it's kind of reflective of what a juggernaut Toyota is in the global passenger car market. So we've been watching them closely, and this seems like their first big step in US production of batteries, and then some kind of visibility into their EV strategy long term.
Hey, can you be quick, 25 seconds? Lucid got a subpoena too, right, from the SEC?
All we know, subpoena, they're looking into the merger with Churchill Capital, which was the Michael Klein-run SPAC they merged with. That was successful. They listed. That's all we know at this point, but it's definitely one to watch.
Yeah, you're having a mellow day, huh?
Oh, Monday.
No, I feel your pain. All right, Ed Ludlow, so glad we could catch up with you. He's West Coast correspondent at Bloomberg News, joining us from our bureau in San Francisco. Quick check on Tesla shares, as we said, bouncing around just down about 0.5%. At their lows, they were down almost 6.4% today. They rallied to be up 2/3%, but again, down about 0.5%. Is that a decliner for you today?
As of now, it is.
Good luck.
Yeah, I hope it stays one. Just for the purposes of my decliners. Okay, that's it. Full disclosure.
Fingers crossed for you. Stick around. We've got the chart of the day coming up in just a moment, right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Is it Friday yet? Oh,
Yeah, right.
I said that
Keep
this morning.
dreaming.
My team's like, what?
Yeah, not a chance.
I'm glad it is only Monday because then we've got 5 days of charts of the day.
Yeah, Kriti Gupta is going to be joining us in just a couple of minutes with today's chart of the day. I don't even know what it is yet. I think I got it in an email today.
I'm going to peek.
Sign up for it, by the way. You can just do that by emailing Kriti.
Let's talk about the markets there right now. Doug Krisner is standing by. Hey, Doug.
Hey, Carol. So we had some positive news earlier on the Omicron variant in South Africa. Hospitals there apparently have not been overwhelmed by the latest wave, and that seems to have created, that news at any rate, an appetite for risk here in the U.S. in terms of financial market action right now. We've got the Dow near session highs. The gain is something greater than 1.8%. It's energy, it's financial shares leading the S&P to a gain of more than 1.2%, and the NASDAQ composite is higher right now by something above 1%. The Securities and Exchange Commission has reportedly opened an investigation into Tesla. Reuters had been reporting this probe centers on the claims from a whistleblower on defects in Tesla's solar panels. The complaint says the company failed to notify shareholders and the public of fire risk associated with these panels and their defects over a number of years. Tesla shares right now bouncing around today. The stock right now is weaker by about 0.8%. And we have shares in the electric vehicle maker Lucid Group. Stock is down on reports the company is under federal investigation following a merger with a blank check company. Lucid shares right now off by about 5.6%. So with the appetite for risk, not surprising, we're going to see a move up in interest rates. 10-year Treasury right now up by more than 8 basis points in yield. We're at 142, and we still have a rally going on in the crude oil space with WTI now 69.60. So we're in the electronic session up by more than 5%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much, Doug Krisner. Well, let's bring in Kriti Gupta, markets correspondent here at Bloomberg Radio. She is doing the chart of the day. This, and I'm not going to keep track forever, don't worry, but I believe it's your third chart of the day.
This is my third chart of the day. And let me tell you, first off, a massive thank you to our listeners who have reached out for this segment. They are so nice.
Oh, cool.
So supportive, and actually listen to me, which is lovely. It's a new vibe. Anyway, so just thank you for that. But yeah, let's get to the chart of the day because thank God green on the screen because we've been coming off of a 9-day session where we have had a 4% drop in the S&P 500. So the question is, when are the dip buyers going to show up? And it kind of looks like they did today a little bit, but I want to broaden it out a little bit. Look at a chart of the S&P 500 for the entire year because one of 2021's major trademarks, hallmarks, staple, whatever you want to call it, is that it hasn't had a correction yet. It hasn't had a 10% drop.
It's a pretty clean line to the upside, isn't it?
It's just a party that just hasn't really stopped. What it has had instead of this kind of one or two major corrections throughout the year, it's had these tiny little mini corrections, or what I'm calling mini corrections. Hopefully that term will stick. But eventually 5 times this year, January, February, May, September, and then December, or I should say November, it's dropped about 4 to 5%. And then it rallies really, really quickly. But the kicker here is not the fact that it's missing the 10% correction or that it's had these little mini pullbacks. It's the speed by which it recovers. Remember in 2020 when we were saying there was this big 30% drop in the market, and it only took 5 months to recover it. Previous corrections have taken years to recover those gains. It was the fastest recovery on record. And now you see the pace of these little mini corrections taking about half the time of the drop. That is not normal. It's not supposed to take half the time.
But maybe it is normal.
Maybe it's the new normal.
No, it's funny that you say that. I remember Joe Patapaglia, somebody who Gruntal and Company worked for several market companies. He's not with us anymore, but he was a great go-to when it comes to the markets. And I remember being in his office at the World Trade Center. So this is going back, and he just had up on I think it was covers of the Wall Street Journal every time I think it was the Dow hit like a major metric. And it took so long in those first few milestones, and then all of a sudden you start seeing the markets take off. So I wonder if there's something different, whether it's computers.
You know what's interesting? I'm so glad you brought that up, because if you actually look at the last time this has happened, where the pace of those recoveries have quickened, it was in 2016. Carol, asked me what happened in 2016.
What happened in 2016?
It was the start of 2 major years of coordinated global growth. When the economy grows around the world, sometimes China leads it, sometimes Europe leads it, sometimes the US and the Americas lead it. This was 2 years of solid growth coming after a really kind of a volatile couple years in the commodity crisis, coming off the European debt crisis, which then again came off the 2008 crisis as well. So this was just 2 years of solid growth. Everyone was growing. Consumers were buying. Production was happening. And then the trade war came along and kind of blew up the party, basically. But the pace of that was really the fact that everyone's growing. Fast forward to 2021, which is right now, and that's kind of the same story. Everyone's growing, because compared to 2020, when the global economy was halted, everyone's growing, everyone's rebounding, everyone's spending, everyone's producing. And so it kind of seems like it's mirroring that perspective. But the question is, does the trend continue?
Well, and I also wonder, as less stimulus is put into the economy. I mean, obviously, we're waiting for infrastructure spending that provides a certain amount of stimulus. Rates are still going to be low, even if the Fed starts to raise rates. But we've had a lot of global government stimulus come in, and I do wonder when we start to really feel the effect of that not happening.
Yeah, that's still sloshing the system. So I'm going to give you the counter argument to the point I'm trying to make.
Sorry.
Which is the no, I think it's great. I just want to give you the other perspective as well, which is, what if this drop that you've started to see, this 4% drop, is actually the start of that major correction? Because some people are saying on the street that this is more similar to the 2018 drop, where you did see Chairman Powell and the Federal Reserve actually hike up rates, and here we are anticipating tighter monetary policy. So it really could go either way. I'll let you and the listener interpret it as you will.
Well, what's the definition of like a mini correction, or the idea of coming in and buying the dip? Because if you're, do stocks, what is the period of time that stocks have to rise after a correction in order for that dip to have been bought?
Well, that's the point of the chart, right? Like that's we don't know, because it's changing. And to answer your first question, what's a mini correction? I think it's 4 to 5%, because there's always going to be these dips, right? A market can't just go higher and higher without taking a little bit of a breather. So you do see that, but the thing is, 3%, you could get that with a sell-off in Apple or Tesla or Nvidia, right? Like, you're seeing a couple of stocks. 4 to 5% requires a little bit broader of a sell-off, but it's not quite as volatile or as bloody as a 10%. So for now, it seems like it's taking about half the time. The dips are being bought. It doesn't really go past 5%, but who knows?
When's the last time we had a bear market?
I believe it was September and October of 2020, so right before the election.
But does that even count?
I don't know. Right? I had a listener
write in. Because people who just say that's just part of,
Well, I had a listener write in and say, what do you think would make the next bear market happen? And I said, I can't call anything because I'm a journalist, but historically, the bear markets happen when it fundamentally changes a growth outlook, when there's a new presidential election, when there is a COVID that is halting the global economy, when there is, say, something going on in Saudi Arabia or Russia, where that is fundamentally changing commodity supply. Those kind of things that change the underlying growth story. And right now, nothing's changing.
Feels like a secular bull market. I don't know. It just really does.
It could be.
Anyway, good stuff. As always, Kriti Gupta, she's our Bloomberg Markets correspondent. Check out her chart of the day, and you can find out more. Just, you got to kill her email. kgupta129@bloomberg.net. Check her out on Twitter/Instagram @Kriti Gupta News.
Well, let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. President Biden is making a pitch for his Build Back Better agenda and touting its provisions that will lower drug prices.
Everyone has less money in their pockets because high drug costs make health insurance more expensive for everyone.
Biden says the bill would let Medicare negotiate drug prices and cap how much seniors pay for drugs. The Omicron variant has Moderna's president saying there's a clear risk current vaccines will be less protective against it. At the same time, Dr. Anthony Fauci says he's encouraged we're not seeing a surge in hospitalizations in South Africa, where Omicron was first identified. Gigi Granville with the Johns Hopkins Bloomberg School of Public Health says it will take a couple more weeks to know just how severe Omicron really is.
It really will take the real world data in a vaccinated country where Delta is already pretty well established, and we will have to see how Omicron does to if it outcompetes Delta here in the U.S.
Granville says South Africa hopes to have initial results of its Omicron study tomorrow. New York City Mayor Bill de Blasio is not waiting to hear more about the Omicron variant. Today, he said the city will become the nation's first to impose a vaccine mandate on private sector workers beginning December 27th. He calls it a preemptive strike.
We're going to be working with businesses all over the city, and that's almost 200,000 businesses that are not already covered by the Key to NYC guidelines right now.
De Blasio says 2 vaccine doses will now be required for indoor activities, up from 1 shot previously required. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stenevec in our Interactive Broker studio. We're also streaming on YouTube. Just go to YouTube and search on Bloomberg Global News. In the meantime, I am kind of obsessed with this.
I know you are.
Billy Lipschultz has been putting out some great columns. He's following it. He says stocks that are tied to former President Donald Trump rising in trading today again.
Again is the key word there, right?
Because we talked about it on Friday.
If you're thinking, wait a second, didn't you guys already do this story? Well, it's a new day, a new story.
Right, not deja vu, or
Exactly.
it is deja vu all over again. This is after his media company and the company taking it public agreed to $1 billion investment. So we're talking about DWAC.
Digital World Acquisition Corporation. It's the blank check firm that's set to merge with Trump's nascent media company. It rallied as much as 10% today. The deal, this was at the open, by the way, the deal will provide roughly $1.25 billion in proceeds to fund operations of the combined entity, a Trump Media and Technology Group Corporation statement said over the weekend.
So DWAC, and this is, we've definitely seen volatility in these names. Stock was up almost 10% at its highs today. It's right now down about 2.7%. So we've definitely seen some big moves in this one. But it is interesting. I think you mentioned, right, the deal is going to provide $1.25 billion in proceeds to fund the operations of the combined entity. It's safe to say we're trying to figure out more an understanding about the companies involved and exactly what is the Trump-connected or Trump-related media company.
Well, we also saw some news coming from Sophie Alexander today that the SPAC merging with Trump Media gets an SEC information request, Digital World Acquisition Corp., which is that blank check company that we've been talking about, disclosing that it has received information requests from U.S. regulators.
And safe to say that happens, right, from time to time. So, you can't get too crazy until you really know a little bit more about it or if it leads potentially to some. The Securities and Exchange Commission in early November sought records tied to meetings involving Digital World's board of directors, its policies and procedures related to trading and the identities of certain investors. The company put that out today in a regulatory filing. And it does not mean that the regulators have determined any rules have been violated, and that's what Digital World said, and that's true.
Yeah, the company shares, I should say, after they went higher, they slumped 5% to 42.71, just after 10 in New York.
All right, you're listening to Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So we have 13 minutes or so until the closing bell. There's been a lot of positivity been overwhelmed by the latest wave in COVID cases. We're seeing strength in energy, financial shares also moving higher today. The S&P right now is up by more than 1.1%. The Dow up about 1.8%. NASDAQ Composite ahead by just 0.8%. We do, that said, have a rally in the small cap space with the Russell 2000 up by more than 2% right now. The European Union's antitrust regulator has apparently paused its investigation into the proposed merger between the British chip designer ARM and NVIDIA. Reuters is saying lockdown restrictions in Europe along with staff shortages have forced EU officials to basically wait for more information. NVIDIA shares right now weaker by more than 2%, although the entire semiconductor space has been a little mixed today. Give you an example of a stock pushing to the upside. Intel shares right now with a gain of about 3.5%. With the appetite that we are seeing for risk assets today, long-term interest rates are pushing higher. 10-year Treasury now at 142. That's benefiting the financial stocks. And energy shares tracking the price of crude oil higher. WTI now in the electronic session, 69.75. So we're up about 5.3% on the day. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much, Doug Krisner. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Nearly 2 years into the COVID-19 pandemic, students across the U.S. have largely returned to the classroom. But earlier disruptions to in-person schooling have left many struggling. Young people need more instruction in the form of longer school days, summer classes, and individual tutoring to make up for lost time. Instead, too many schools are doing the opposite, adding last-minute vacation days to the academic calendar. Districts from Florida to Michigan to Washington State have done this recently, citing staffing shortages, among other excuses. Reducing in-person class time isn't just a disaster for students, it's a betrayal of public trust. At this point, the evidence against remote learning is overwhelming. The closure of schools during the pandemic has caused immense damage to U.S. students. Reversing those trends will require students to learn in person, period. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just about 10.5 minutes left in today's trading session, getting ready to wrap up this Monday day of trading. And you've got, as you just heard from Doug Krisner, equity averages, we've got a rally underway, and we're hovering just off, actually, our best levels of the session, but broad-based with industrials, energy, materials, and consumer staples, your outperformers. So let's get to it.
Brad Mcmillan is Chief Investment Officer at Commonwealth Financial Network. He joins us on the phone from Waltham, Massachusetts. Commonwealth has approximately $232.5 billion in assets under management. Brad, how are you?
Great to talk to you, Tim.
Yeah, it's good to have you back with us. Hey, help us make sense of what to think on a day like today, where we see, you know, as we said, as we talked to Vince Signorella earlier in the day, he said we can't quite call it dip buyers coming back in and buying the dip, but we're seeing quite a rally after last week's sell-off.
Well, that's the thing. I mean, there was a lot of fear out there. There was a lot of worry about Omicron. There was a lot of worry about the Fed. Overstated. So I think a lot of the people who ran away are coming back. Again, it's not really dip buying. It's just kind of adjusting to the news as it comes in, which is a good thing.
What do you make of, I know we like to talk equities, and I get it, but I also like to talk about the fixed income market. Brad, what do you make of the 10-year seeming to right itself? We've got a yield of 1.42. It looks like that 134 that we saw on Friday was perhaps a mistake, a false move. It wasn't a lot of conviction behind it. But do you agree? And then what does that tell us?
I do agree, because I think it's a play on future growth. I mean, there's a real sense out there with the 10-year staying low that the bond market is telling us that some of this growth we're seeing isn't going to last, that the Fed is in fact going to make a mistake, and that's going to kill the recovery. I don't think that's necessarily the case. And I think, again, it's a question of the fear of that drove rates down. But now that rates are coming back up, it's a recognition that, yeah, there's some more durability to growth here. And I think, we're not going to see inflation collapse. It's going to go down, but growth is going to keep it, higher than it's been.
All right, we're gonna get some data this week when it comes to inflation. I'm wondering what numbers are going to concern you. We're going to expect a 6.8% headline read on CPI.
You know what? We're going to hang on for a second. Forgive us, everybody, and our listeners, a little connection problem there. And we're going to try and clean it up with Brad and then come back to him.
Well, let's talk more about the markets and what exactly is happening in today's trade, Carol. I was talking about inflation and the read that we're going to get later this week when we get CPI. 6.8% headline read on CPI. That's what's expected. That could be the highest, if that happens, highest since 1982.
Two things. First of all, it's not the Fed's preferred measure of inflation, right? We know core PCE is. And the second thing I would say, and this is thanks to Mike McKee, who is my go-to when it comes to all things global economy, but it's going to be pre-Omicron data. So, you know what I mean? So the impact and the worries are not going to be reflected in those data points. So I think it makes me think, well, I don't know if the markets will pay as much attention. It probably will, because it'll be whoa,
you know what,
a little staggering. But do you know what I'm saying? Like, I think we need to put it in a little perspective.
Okay, fair, but here's how I'll push back a little bit.
Please.
What is the best way to understand if our behavior has changed because of Omicron?
Meaning what?
Meaning that this is the third time we've heard about a variant, and we are resilient. We have been resilient as far as spending money goes. And what we know now about the virus is a lot different than what we knew 18 months ago. So are we changing the way we're doing things? Perhaps.
Right.
But look at what travel stocks are doing today. Look at what reopening stocks are doing today.
Right. No, fair enough. I guess I just think that those data points that come out, I don't know if it will be telling us that much. But I know what you're saying.
That's a good point.
Your point is, we figured it out. We know how to do this. It's not
we're living our lives.
It's not March of 2020 and everything's shutting down and we don't know what to do.
Exactly.
So it's a fair point.
Hey, let's bring in Brad Mcmillan, Chief Investment Officer at Commonwealth Financial Network. We were working on his line. Apologies to our listeners and to our viewers as well. Brad, how should we watch inflation? Carol and I were just talking about it. How should we watch these numbers we get on Friday?
I think the real question is it going to spike up further, or is it going to roll over and start to come down? That's what I'm watching for. A lot of the factors that were driving inflation, we saw the excess demand from the federal stimulus programs. We saw the constraints in supply chains. Those aren't going away, but are they getting worse or better? And I'm looking to see if there's signs that it's getting better.
Where is all this spending coming from? I'm a little confused. Did people just sock away so much money? No, you know what I mean? I don't quite get it, because we know the government programs, right, have largely stopped. And I just wonder, Brad, is it just people saved up so much and they're continuing to just draw upon that? Because the job market getting better, but we still see a lot of people that aren't working. I just don't understand it.
I think part of it, Carol, is absolutely we're still spending off some of the savings from the stimulus programs. But beyond that, because that's going to go away. But what people aren't realizing is we're seeing average weekly income go up at a rate of about 8% a year.
Right.
And that's something that is just, people are making more money. Those wage increases are getting spent. And that growth is likely to even accelerate, as wage increases go up and hiring goes up. That's not going away.
So what does concern you?
What concerns me most is the supply chain at this point.
Yeah.
We've seen spending come back. We've seen confidence. It's still low, but people are spending. Can the supply chain heal? I think it can. I think it is. But that's what could break the recovery.
Yeah. Do you think it's likely?
I'm not sure. It depends a lot on Omicron.
Yeah.
The U.S. will handle it. I mean, you guys were talking about that, and I agree with that. But can other countries handle it? And that's where the supply chain is going to break or not.
Right. And we don't see everybody handling it the same way. And I do also wonder, A lot is still yet to be known, and I think it's safe to say that the next 2 to 4 weeks are going to be key. Hey, Brad, got to run. Glad we figured out that tech problem. Brad Mcmillan, he's Chief Investment Officer at Commonwealth Financial Network, on the phone from Waltham. Roughly $232.5 billion in assets under management. All right, folks, just a few minutes left in today's trading session, and I thought Tim and I were going to go to the mat over inflation. Just kidding.
Maybe by the end of the week. Depends on what happens Friday, right?
Exactly. We're holding on to, well, just off our best levels of the session, but the S&P still up about 55 points, a gain of 1.2%. Dow up 1.9%, and the NASDAQ, the laggard, but still up just shy of 1%. All right, let's head on over to our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the closing bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Shanali Bassick in for Caroline Hyde, counting you down to the closing bell. And now, here to help take us beyond the bell for real this time, it's our global simulcast partners, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences. Carol, welcome back to the party.
Thank you so much. It was just the metaverse before. We weren't really going beyond the bell, but we are right now watching the equity markets. Taylor, I'm going to steal a little bit of your thunder, but just watching that 10-year yield kind of correct from where we were Friday, it makes you wonder if it was an aberration in terms of the trade we got on Friday.
Yeah, you know, Carol, I love that you brought that up. I had 3 words in my inbox this morning from a former trader saying, why did yields fall so much last week? Short covering, short covering, short covering was the trade I got. So, Shanali, some of this can be technicals that we are hearing, at least for our TV audience. It is a mix of some fundamentals as well.
Yeah, you have those people trading treasuries thinking the basis trade was safe, relevering and delevering. So hopefully on the way down further is not as choppy.
Yeah, I think if we look at the big difference from last week to this week, it's more and more information about the Omicron variant, and it's still too early to tell as we continue to hear from the nation's top infectious disease expert as well as other doctors we talk to. But investors are kind of latching on to the idea that, hey, this variant perhaps isn't as bad as we initially thought.
And not just investors, but consumers. You're just seeing the uptick in travel. We had Eric Rapero on of La Bernardin who talked about the restaurants still being packed, at least here in New York City. You're seeing a lot of optimism.
Wasn't that a great interview? You guys, I mean, we've been hearing calls about the death of Midtown, and he firmly disagrees by his reservation list. Midtown and the Midtown Business Lunch, it is back.
All right, Midtown is back, and at least for today, you're seeing stocks back in the green. The Dow Jones Industrial Average, I'm going to give you the points because Taylor wants the points, up 642 and change. That's 1.9%. The S&P 500 going to finish the day higher by about 53 points, right around 45.92, up about 1.2%. And the NASDAQ Composite higher by about 0.9%, up about 140 points. The outperformer on the day, once again, it was actually those small cap cyclicals as measured by the Russell 2000, up 2% here on the day, closing, Carol, right now at 22.03 and change.
Speaking of closes, just watching the VIX now at 27.47, so down about 3.3 points. So we definitely saw a back off. Makes not surprising considering the rally that we saw in the equity trade.
And this is so interesting, Carol. When you talk about the rally, it was a yield higher kind of day, and yet technology was also in the green on the screen for the sectors, which we do for our radio audience every day, the winners and the losers. First, there's a lot of green even in the loser section, but it is the composition that really catches my attention because it's energy and materials that are up 1.6%, but it's also media, technology, hardware, also up about 1.7%. Typically, you don't always see those up on the same day, but you go down to the bottom, and I'll keep it brief. I know we're taking a look at auto and some of the auto and semiconductor components. That's a big loser, at least on the day, off about 0.6%.
Oh, okay. She was sure.
It's Monday.
Yeah, oh my God. I still need more coffee. That's all I'm going to put it out there. Hey, we've been talking about travel stocks. They really were on a tear today, whether it was airlines, whether it was cruise lines. It was all in. I was looking at Norwegian Cruise Line Holdings, ticker NCLH. This was top in the S&P 500, up 9.5%, just off its highs of the session. So, you know, even though we had so many worries, obviously, last week, this week it was definitely a different mood, and it felt like, okay, we don't have to be so concerned about the variant. You can go out there and travel, and we saw it play out. Royal Caribbean, United Airlines, American Airlines, all of these, Carnival, topping your major equity averages. In keeping with this theme, Booking was also a top performer in the NASDAQ 100. It was up 5.3%, $2,227.28 for you folks on radio. It's still down about 14% or so from its November 9th high. And I want to mention DocuSign. We talked about it big time last week. Big disappointment on Friday. It was down 42% following disappointment with some of its latest financial metrics. Stock rallying up about 6.5% today. ARK Innovation, Kathy Wood's ARK ETF snapping up shares during that drop of more than 40%. And for all of you technicians out there, RSI saying it's very, very oversold. So definitely a little bit of a technical play there as well, Tim.
Oh, let's talk a little bit about decliners today. Tesla erases most of today's decline. It still, though, ended the session down just about 0.6%, $5.96 lower. The shares fell after Reuters reported today that the SEC opened an investigation into Tesla over whistleblower claims on solar panel defects. Reuters cited a letter from the agency. Ed Ludlow reminded us that, this is much as people like to call Tesla an energy company, it still primarily gets its revenue from autos. Perhaps that's one of the reasons why it erased much of the losses earlier in the day. Still, though, ended down about 0.6%. Moderna finishing the day down about 13.5%. It did fall as much as 16%. Among the worst performers in the S&P 500 today, the biggest drop in a month. Investors really weighed today the risks of the Omicron variant against a broader economic reopening. At the same time, we did see a tweet late yesterday from Vermont Senator Bernie Sanders tweeting that Pfizer and Moderna stockholders, that gains that they've made are, quote, obscene. And I wanted to hit on Peloton because Carol talked about the reopening trade today. Peloton shares today, certainly the opposite of a reopening trade. Shares were down as much as 6.2%. They did trade earlier in the day during the session at a 52-week low, down about 75% from their January high.
You want to talk about what's down from a January high, Tim? I give you this. Let's do it with yields because we're up on the day, a rate of change kind of day, up 9 basis points, as you can see there on the screen. But what is interesting, on the 10-year, we were looking at a 167 just 3 weeks ago, a 2% on the 30-year, literally just 3 weeks ago. And Carol, I want to come to you on this because I'm getting a lot of some of the technical issues that come into this and some of the fundamentals. Yet the MOVE index, which is the volatility gauge of bonds, and we talk about the VIX with equities, the highest now since the pandemic, March of 2020, and it catches my attention.
Well, I think it's a really important metric, right? And I think one of the things that we can count on, we talk about it so much, the volatility that we've seen that has crept back into the market. Chanel, you pointing out that the traders on Wall Street are going to probably love it, right? Because they can really play this market. But the market at this point is trying to figure out, where do we settle? There's still so many questions. We're going to go into a silent period because of the Federal Reserve, so we won't be hearing from any of those Fed speakers. But we're all going to be wondering, what kind of tone, what kind of message does the Fed ultimately lay out there? And then how do we trade on that, and for how long?
Well, yeah, and I mean, it'll be interesting to get that economic data on later this week with regards to the CPI data. I mean, I keep looking at these economist estimates continue to tick higher and higher. We're now at about 6.8% is the average of the economist estimates. That's going to put us at the highest year-over-year rate that we've seen on consumer prices going back to the 1970s. So you remember when all this started, Shanali, that it was all like everyone said, oh, don't worry, inflation, it's just transitory. This isn't as bad as the 70s. You don't have the shocks that we had with regards to energy prices and everything else. I know it's just one number, but it's a big number.
And depending on who you are, that stagflation conversation is a non-zero probability to some people. That big worry is starting to soak in on a lot of credit desks.
Do you know how much I paid for a Christmas tree this weekend?
How much did you pay? $150?
It was a lot. It was more. Let's say it was more than previous.
How tall is it though? Because they sell them by the foot.
We talked to it. I can't remember.
But it's double last year's prices.
We talked to. I can't think of her name, and forgive me, but she's head of like the Christmas Tree Association. She said there's plenty of real Christmas trees out there. Yeah. She actually pointed at the artificial trees that there might be a shortage because they might be stuck on cargo ships. The only thing I will say in terms of inflation, transitory, we could debate forever what that really means. And that's why Jay Powell said, let's put it to the side because we're wasting so much time on that. But you go to the pump, there's plenty of gas there. I'm not quite understanding why things are.
I filled up my tank this weekend. You know what? It was a lot. You're one of those? You're one of the fake Christmas tree people, Carol?
No,
the artificial ones.
No, I have like 2 real Christmas trees in my house.
We went to buy.
I'm all real.
Look, we went to buy a Christmas tree yesterday, and they were all out at our local neighborhood Christmas tree place. They were all out. They're getting more from Vermont tomorrow, though.
Wow.
Yeah, and they are expensive, though. I mean, look, they're over $100, at least in New York City.
But that's New York.
I know.
Yeah, if you can get a 6 to 7 footer for $60, you are killing it.
Where are you going to put that, though?
Here you can get that in New Jersey. Our wonderful producer gets that. They are about double or triple
Carol's
that
probably
in
got
the
like
city.
a 10-footer, don't you?
It is unbelievable.
Right. Did you get a separate one for your yacht, like a little 5-footer?
Sailboat.
To put there in the foyer of your yacht?
No, because then the needles are all over the place and it's really messy. You can't do that. You can't do that.
But in all seriousness, your Christmas shopping carts are probably empty by now, getting sold out quickly, so you procrastinators better get on it.
I guess so. I want to go back to the inflation data. Taylor, do you think that the bond market is going to react if we get some kind of crazy number?
You know, it's so interesting because I've been hearing, as Romaine said, a 6.8, and the last time we had a 6.2. But all of the input data and the anecdotal data says that it's much higher than 6%. People's input costs are up 10 or 20%. Now, those are just sort of 1 month off anecdotes, but you do wonder, is that a real number?
Yeah, I don't know. All right. And Romaine, real quickly, do you put bow ties on your Christmas tree?
You should see our Christmas tree. It's spectacular.
I bet it is. I have no doubt.
We don't want to insult Santa Claus. You got to go all out.
No, because then he's not going to come down the chimney and he's not going to leave anything under the Christmas tree. All right, that's going to do it for our Beyond the Bell coverage, our market wrap on this Monday. Cross-platform coverage on TV, on radio, on YouTube. We'll see you again, same time, same place on Tuesday, and we'll be done with Monday. Thank God.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Do you want to hear the rest of my Christmas tree story?
Yes, please.
So,
sounds idyllic.
Well,
until you didn't get the tree.
Yeah, we had this plan yesterday. You know, borrow the wagon from our neighbors, bring the little guy in the wagon. We got there and they were all out of Christmas trees. They had one left, but it was more than 11 feet.
Oh, was it beautiful though?
I don't know. It was all rolled up or whatever, bound.
I thought you were going to say
but it was like a $200 tree. And also, we don't have ceilings that tall.
Yeah, I thought you were going to say it was like a Charlie Brown Christmas tree.
No.
Yeah, I got to do it over the weekend and get on it. But
hurry up.
Yeah, I know. Pressure. All right, pressure. Let's see what's going on when it comes to world and national news. There's a lot going on. Nancy Lyons keeping track.
Yes, Carol, thank you. The Justice Department has filed suit against the state of Texas to overturn the new redistricting map, which it charges was designed to reduce the voting power of minorities. Bloomberg's Irv Chapman reports from Washington.
Associate Attorney General Vanita Gupta said the Texas population grew by 4 million in the last decade, 90% Black and Hispanic.
The redistricting plans approved by the Texas state legislature and signed into law by the governor will deny Black and Latino voters an equal opportunity to participate in the voting process and to elect representatives of their choice in violation of the Voting Rights Act.
Attorney General Merrick Garland added,
"We have carefully assessed the facts and the law before taking action."
The Attorney General asked Congress to pass a bill strengthening his ability to deal with such gerrymandering. In Washington, Irv Chapman, Bloomberg Radio.
President Joe Biden says prescription drug prices in the U.S. are excessively high. He adds his expansive tax and spending bill would help lower the costs.
All of us, whatever our background, our age, where we live, we can agree that prescription drugs are outrageously expensive in this country.
Biden says American could do better, and he says his Build Back Better plan is the way to do it. The plan would direct the federal government to negotiate Medicare drug prices and would penalize drug companies for massive price hikes. U.S. government officials say they'll boycott the Beijing Winter Olympics in February due to concerns about China's crimes against humanity and other human rights abuses. The so-called diplomatic boycott means athletes are still free to compete, even as administration officials stay home. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Are you technically a millennial?
Yeah, I am. I'm glad you asked. I'm what is considered or what they call a geriatric millennial.
Are you serious?
Yes, I am serious.
That is great.
I don't know what the age cutoff is, but I know that I'm definitely a geriatric millennial.
Like, do the Gen Zers look at you like you're a millennial?
They don't even know how to talk. We don't even communicate. We just TikTok each other.
All right, so okay.
Yeah.
A little somber stuff. Have you written your will?
I have. I felt everything changes when you have a family.
Yes.
And that's the big thing. And I
The
think
thing
that's
is you have
exactly what this article is about.
Right. So the story, it's in Dow Jones, Wall Street Journal, by Veronica Dagger. And millennials are finally embracing one of the cornerstones of adulthood by writing their wills. I'm reading from the story. Lawyers and financial advisors are hearing more frequently from younger people who want to get their affairs in order should they die unexpectedly.
All right. Is it more, Carol, about the pandemic and the understanding of one's mortality, or is it more about millennials are entering a stage of adulthood that, for generations past came earlier?
Yes.
And a lot of those
Yes.
milestones
Maybe all
came
of it?
earlier. I think so. And I can speak to my own experience again. When we had a kid, we decided to get life insurance because you don't really need it. Look, don't listen to me. In my opinion, you didn't really need it until we had a kid, until you had a dependent.
Right, because you think about it, God forbid something happened.
Right.
All right, so then, first of all, who takes care of your child? And
Exactly.
You don't want to leave that like haphazardly. You want to make sure it's laid out. And then you have to think about the financial aspect of that, right? And raising that said child.
Well, look, it says kind of both of those things in this story, right? Underlying, according to the financial experts, the financial advisors that Veronica Dagger spoke to, part of it has to do with uncertainty around whether someone's going to get sick in their family, whether they're going to get sick, but also these ideas that we're experiencing events that we haven't seen before, like rising inflation.
This is where I am so all in on financial literacy, and I feel like kids should be learning it in grade school about investing, about taxes, about life insurance, about all this stuff, so that I just think it's an important part of our process.
They should listen to Bloomberg Business Week Radio.
Yes, they should. There, you said it.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So much of the market psychology today was driven by some positive news on the Omicron variant from South Africa. Hospitals there have not been overwhelmed by the latest wave in cases. That helped to create an appetite for risk, and we had higher stocks as a result. Also, long-term interest rates pushed higher today. 10-year Treasury last quoted in New York at 1.43%. So we were up about 10 basis points on the day. That strengthened financial shares, and it helped to lead the S&P to a gain of about 1.2%. We also had many in the energy complex trading higher, along with a move up in crude oil. WTI now in the extended electronic session, 69.95. The gain here is something greater than 5.5%. Where the Dow is concerned, we were up 1.9% today. In the NASDAQ market, we had the composite index rising about 0.9%. A lot of strength in small cap stocks, with the Russell 2000 today higher by 2%. In the minus column, we have to include Lucid Group. This is the electric vehicle maker. Apparently, the company is now under federal investigation following a merger with a blank check company. A regulatory filing notes that Lucid received a subpoena from the SEC on December 3rd. Back in July, this company became public after combining with the special purpose acquisition company Churchill Capital Corp. 4. Today, Lucid shares down 5%. I'm Doug Krisner. That is your Bloomberg Business Flash.
It is indeed. All right, Dougie, thank you so much. Well, it's not easy to be a company connected with the global travel and hospitality industry during a pandemic. Like we saw, Tim, travel stocks rally in a big way, cruise lines, we certainly saw the airlines, but it's been volatile depending on the COVID headlines.
It's been a tough 18 months, and it doesn't matter whether you're an airline, whether you're a cruise company, whether you're a hotel or even a casino, or perhaps even a service that people use to book these.
Which is exactly what Trivago is. And lucky for us, back with us is Axel Heifer. He's CEO of the online travel platform and search site Trivago. He is on the phone in Germany. Axel, good to have you back with us. How are you?
I'm good, given the circumstances, obviously.
No, I know. I feel like depending on when we're talking to you, I feel like over the summer we were starting to feel more optimistic. I think we talked with you at the end of July, and things felt a little bit better. How are things going for you and your team? We've been watching the headlines, certainly out of Germany. You guys deal with, Europe in a big way. What are you seeing? What are you hearing, both when it comes to folks using your site and also internally your own team, kind of managing through another round of this?
Yeah, I mean, it's a very interesting point in time because the situation got a lot worse, and particularly in some of our core markets in Europe, with infections on record highs in Germany and in many other markets. On the other hand, we continue to believe that the outlook and the spring will be very, very strong, and that we will be through the pandemic more or less by mid of next summer. So right now, very tough and sometimes also a bit depressing, but the outlook's still very positive.
Well, in terms of outlooks, in the earnings report that you reported back in November, on November 1st, Trivago said that it does not expect a full rebound in travel over the winter. When do you expect a full rebound in travel?
I do think that we will see a very strong spring. I mean, like this year, and also last year, we've seen that coming out of a winter with high infections, with restrictions in many places, people want to travel and want to actually see friends and family, want to get out and get a break. And we expect exactly the same pattern. Having said that, what will be different from our perspective in 2022 versus 21, and for sure, obviously, 2020, is that there is a significantly greater number of people vaccinated twice or even 3 times. And, to be honest, also a significantly greater number of people that got sick already and have antibodies because of that.
One thing I wanted to go back to is the Thanksgiving weekend. How did that go for you guys? And is that an indicator of maybe what we'll see through the rest of the winter season?
I mean, it went well, and the U.S. overall is still much more stable than Europe, to be honest. And there is one very big benefit in being in the U.S. You don't have to worry that much about travel restrictions being imposed between states, which is a problem in Europe and is something that adds a lot of uncertainty to your travel plans. there's a regular flow of new restrictions, change in restrictions, testing requirements, etc. And this friction is what is concerning people and holding them off from traveling. In terms of looking forward, it is very, very difficult to say. The new variant is obviously adding uncertainty. And like in the past, some governments think that you can stop a virus from entering the country by imposing very strict travel restrictions, which obviously only works for so long.
It sounds like you disagree with that assessment.
I mean, it's very difficult to say, to be honest, and I don't want to be a politician in times like we are in today, but it works to slow down the spread of a virus, which in particular in winter can make sense if your hospitals are full already. But the general idea of locking out a virus in today's world and in the global economy that we're living in is just theoretical. And every new virus variant will make it eventually to every single country.
Look, I got to tell you, my colleague, and I'm only going to read this because he tweeted about it, Andre Pierre Duplessis, who works with me on Quick Take, just got back from South Africa over the weekend. He flew into Newark, and he wrote that nobody asked to see his COVID test, nobody checked his temperature, nobody told him of any quarantine rules, and he wasn't even given a CDC pamphlet like he had previously gotten in Florida.
So coming back, none of that happened?
Yeah, over the weekend. And he was coming back from South Africa.
That's pretty interesting. Do you think that's going to change, though, Axel, depending on the numbers in terms of COVID cases?
I mean, we don't know that much about the variant yet, but it seems to be sufficiently different so that it can spread more easily amongst vaccinated people. So I do think it's not unlikely that it will be the dominant variant very soon, pretty much everywhere. And the key question is it more dangerous than Delta or isn't it? I guess that's what scientists are currently working on to find out.
Hey, sit tight. We're going to do some news and then come back because we also want to get into a partnership that you have with Huawei because we really find this interesting, and I know our audience will as well. We're going to come back with Axel Hiefer. He's CEO of Trivago on the phone from Germany. We'll continue getting the outlook and, again, talk about some of the partnerships that they are doing as that platform continues to evolve.
Eager to hear from him the breakdown of what he's seeing on the platform when it comes to geographies, because the company does get revenue a lot from the United States, but also from Germany, the UK, Brazil, and Australia. So how are people in different places using the platform differently right now?
And I have to say, for me, when I go to travel, I get a little overwhelmed by there's so many different travel platforms, and I'm always like,
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Oh my gosh, the conversation we've had behind the scenes of like credit cards, points, and how do you use them?
You know what it is?
we should do a podcast on this.
We should, but here's what we're illustrating. Like, there's some serious pent-up demand for us to just get out there and get around the world, right?
Yeah, exactly. I'm so into it in terms of traveling. We're going to come back to Axel Heifer in just a moment. Of course, CEO of Trivago. We'll talk, continue to talk all things travel and some of the partnerships they're doing.
Yeah, looking forward to that. In the meantime, a check of the trading day. How it ended, here is Doug Krisner.
Hey, Tim, a lot of positivity in markets, and I think it's very much linked to the positive news that we had out of South Africa, where the Omicron variant is concerned. Hospitals there have not been overwhelmed by the latest wave of cases. So we had a recovery after last week's bout of volatility in the equity space. The Dow Industrial Average, as an example, was up 1.9%. We had strength in financials and energy stocks today, leading the S&P to a gain of around 1.2%. The NASDAQ Composite picks up about 0.9% on the day. The European Union's antitrust regulator has temporarily paused an investigation into the proposed merger between the British chip designer ARM Limited and NVIDIA. You'll remember last week the FTC sued to block this deal. Well, Reuters is saying that in Europe, lockdown restrictions combined with staff shortages have essentially forced the EU officials to wait for more information. And we had shares in NVIDIA today down by more than 2%. That move in long-term interest rates to the upside found the 10-year Treasury last quoted in New York at around 143. Weaker dollar, check that. The dollar's kind of stable. What I'm seeing is a much weaker yen as we get set for trading in Tokyo, 113.50 against the greenback. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Let's get back to Axel Heifer. He's the CEO of Trivago, still with us on the phone from Germany. Hey, Axel, tell us about the thing you're doing, the partnership with Huawei. It's a strategic partnership. What is that all about?
Yeah, it's actually very interesting. So Huawei is building basically their own ecosystem with Harmony OS and their own services. And the most important services from our perspective are obviously search, Petal Search, and Petal Maps. And we are partnering with them to help them to bring similar services to their customers that exist already on other search engines like Bing or Google, and leveraging our supply of hotels worldwide.
I'm curious about why Huawei. I mean, anyone who listens to our program regularly or follows the news knows that Huawei has been under scrutiny by governments around the world and certainly engaged in a spat with the U.S. government. So take us into your thinking here.
Yeah, so I mean, we are interested in basically helping every search engine to compete more effectively with Google, and we are also in discussions with others, but it's for sure one of the big search engines that is up and rising, given that they have a huge installed base of devices that will be powered by their new search over the next years.
Hey, how important are partnerships, alliances in terms of your platform and figuring things out going forward?
I do think in general to work with partners strategically in the long term is the right approach. And I mean, the business approach that some platforms have been taking of basically taking care of themselves and not really considering their partner's interest is not a sustainable strategy from our perspective. But more specifically for us, partnerships are very important because they allow you to deliver better service to your users and realize economies of scale without M&A activity.
No, I think it's really key. You know, I have to be quite honest with you. In the break, Tim and I were talking, and I'm saying that sometimes I just get overwhelmed by the amount of travel platforms that are out there. And so how do you, and truth be told, I am now looking for ease and platforms that are really clear. So how do you think about how you want to evolve so that you can catch your users' attention or more users' attentions?
So you're absolutely right. I mean, we are in a situation where there are too many platforms, and in particular in the pandemic, we've seen that size matters a lot. And it doesn't only matter in terms of economics, but also in terms of quality of service, because the more users you are having on your platform, the better your data is and the better your product is. And so what we started to do, and the Huawei partnership is one of the first partnerships in that direction, is we started to develop business-to-business solutions where we help actually other companies to serve their customers better by accessing our back-end services and basically benefiting from our size and our scale for their own benefit.
Axel, because Trivago offers people who use the service weekend stays, cars, flights, packages, you have this unique insight into how people are feeling and booking at any given moment. I did want to ask you just about what you're seeing on the platform in real time right now, because this is a global platform. You serve customers and get revenue from the US, from Germany, from Brazil, Australia, the UK. What can you tell us about what people are doing on the platform right now that does or does not reflect any sort of trepidation about Omicron?
Yeah, so the U.S. is relatively speaking stable, to be honest. So there is not that much concern about the new variant yet. Europe has been hit by a combination of really increase in Delta cases, a significant increase in Delta cases, and concerns about the new variant spreading. And then in Asia, you see a decline in overall activity, predominantly coming through the new variant. So it's a bit a mixed bag, as you would expect across the globe. But generally speaking, people are nervous, and they are nervous about making travel plans because they have seen in the past that any new variant is likely to lead to travel restrictions at some point in time.
Yeah, so you do think about if you're going to make some plans, whether you go local, right, so that you don't have to worry about maybe borders shutting down once again. Hey, just quickly, there were some notes that you shared with our producer, just got about 30 seconds. The metaverse or meta, is there a role for you in all of that?
Yeah, I don't know. I mean, for sure, if the future is the metaverse, there will be a future for comparing prices, even in the metaverse. To be honest, I don't know yet. Okay. I mean, it's very visionary and very far-reaching, and if successful, I guess there are also some questions that politicians would need to answer, or we as society need to answer. But there will be a place for hotel price comparison in any possible future.
Wild. Great to be able to bounce that off of you. Axel, the best to you and your team, and thanks for finding time for us as you always do. Axel Heifer, he's Chief Executive Officer at Trivago, on the phone from Germany.
Why book a hotel, a real hotel, when you can book one in the metaverse?
You know my dark scenario that with climate change, you won't be able to go outside, so you're going to have to be traveling in the metaverse.
No,
sorry, world, but I think I know. Let's just get it right already. All right, you're listening to Bloomberg Business Week. Carl Massar, Tim Stanovic. Let's head on over to Nancy Lyons.
Nancy standing by in our 99.1 newsroom in D.C. Hey there, Nance.
Hey, Tim. The Justice Department is filing a lawsuit against the state of Texas over its new voting law. U.S. Attorney General Merrick Garland says voters should choose their representatives, not the other way around.
Texas has violated Section 2 by creating redistricting plans that deny or abridge the rights of Latino and Black voters to vote on account of their race, color, or membership in a language minority group.
Garland says Texas gained 2 new seats in Congress after the 2020 census, but designed those districts to have white voting majorities. Meanwhile, in Georgia, a bitter primary fight could be coming in next year's race there for governor. Bloomberg's Nathan Hager has more from Washington.
David Perdue, the 71-year-old Republican who lost his Senate seat earlier this year to Democrat Jon Ossoff, is challenging incumbent Governor Brian Kemp. Perdue comes into the race as a favorite of former President Donald Trump, setting up a contest over how much loyalty Republicans will need to show the former president and his false claims that last year's election was stolen from him. Whoever wins the Georgia race will likely face Democrat Stacey Abrams. She'd been planning for a rematch with Kemp after her narrow loss in 2018. In Washington, I'm Nathan Hager, Bloomberg Radio.
Senate Majority Leader Chuck Schumer is telling his Democratic colleagues he's still aiming to pass President Biden's nearly $2 trillion economic package before Christmas. Of course, it'll be competing with other priorities like raising the debt ceiling and the National Defense Authorization Act. President Biden today says he wants it passed quickly, but he says it must be done no matter how long it takes. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
I can't wait to walk into the metaverse, buy my NFT, and
I was just gonna
and then
ask
go into
you.
my sleep chamber and just take a long nap.
The stockings are hung by the chimney with care. You have created your holiday list that you have
Yes.
distributed to Santa and the elves. How many NFTs are on there?
Exactly. Let's see how that plays out in the workshop, right? There's
We
no.
can't make something that's nothing. I'm sorry.
Help me, people. I am just not smart enough to get this.
Well, let's turn to our good friend Tom Brady.
I believe that's Tom.
Well,
Did I do that right, Paul Brennan?
Well, maybe I'll turn to our good friend Vildana
gonna get in
Hyrick
trouble.
here at Bloomberg News, who wrote today about Tom Brady. Following the successful launch of his first collection of NFTs, that's non-fungible tokens if you're not in the know, Tom Brady is going all in by offering a set that focuses on the beginning of his football career.
Yeah, he's launching a set on his Autograph NFT platform that highlights a resume he had created prior to his 2000 draft selection, includes a stopwatch, cleats, and jersey used at the NFL Combine, among other items. Whether it will include his famous shirtless picture, we can only just hope it does, from the professional tryout, which has since become an internet meme, retains to be seen. So wait a minute.
Hold on, I don't get it.
There's a digital component, and then there's stuff, right?
I don't know. I don't actually know.
More than 16,000 collectibles are part of the reveal called Live Forever, the Tom Brady Origins Collection. Bum, bum, bum. Though there'll be a mystery at the time of purchase, holders of Brady's first drop will have early access to the new launch, which opens to the public on December 9th. Tokens owners can then unlock them starting on December 14th. If open, they will reveal a collectible in one of 5 possible styles and 5 possible tiers of rarity. Is this an NFT? Or is it just the NFT that you bid on and then it explodes into, is it like those things you open
Carol,
at Christmas popper?
You're going to have to buy it and find out. Okay?
Yeah, that'll be a no.
Well, interest for non-fungible tokens, known as NFTs, of course, they allow holders of art and collectibles to track ownership. That's exploded. A wide variety of them have become uber popular, and they've commanded eye-popping prices at various auctions.
But you get stuff, cleats, a jersey, so then is it an NFT?
I don't know.
Help. That's all I'm going to say.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had positivity in the equity market today, given some positive news on the Omicron variant in South Africa. Hospitals there apparently have not been overwhelmed by the latest wave in cases. And President Biden's chief medical advisor, Dr. Anthony Fauci, was saying this news is a bit encouraging when it comes to the issue of severity. Dow Industrial Average today up about 1.9%. We had strength in financials and energy shares leading the broader market higher. The S&P was up about 1.2%. NASDAQ Composite lags just a bit. We were up there about 0.9% on the day. And then a rally in small caps with the Russell 2000 jumping more than 2%. That said, strategists today over at Morgan Stanley were saying the Fed is really the greatest threat to the stock market right now, as opposed to the Omicron variant. You'll recall last week, Fed Chair Jay Powell signaled that fastering tapering of asset purchases. Well, Morgan Stanley strategists are saying for markets, this is essentially tightening, and that's going to lead to lower valuations, as it always does in this stage of the recovery. Long-term interest rates up today as the result of that risk appetite. 10-year Treasury last quoted just under 143. A rally in crude oil today. WTI now in the electronic session, 69.95. So we're up more than 5% on the day. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, really appreciate that. Well, NFTs are non-fungible tokens. They allow holders of art and collectibles to track ownership via the blockchain. They have exploded in popularity, and that has definitely caught the attention of the world's auction houses. Early last month, Christie's opening up its doors for the first time in-person hybrid auction experience, but in person for the first time since the pandemic began. And, Tim, it included some NFTs.
Bonnie Brennan is president of Christie's America. Bonnie joins us on the phone from New York City. Bonnie, how are you?
Good. Thank you so much, Tim and Carol, for having me.
All right. So just give us your honest answer here. When you first heard about NFTs, non-fungible tokens, were you thinking to yourself, give me a break?
Or opportunity.
Yeah, no, a definite opportunity. But I have to tell you, I think we all had to, our first question was, what was an NFT? You know, in the last, since March of this past year, we've all been learning in real time. And as you said, the NFTs have really taken the art world by storm. We're particularly proud of having sort of ushered in this global rush to digital art back in March when we sold the Beeple for $69 million. And now to date, if you can believe it, we've sold over 75 NFTs for more than $136 million. So it is an important new part of our market. It's had a great impact on the entire auction business and certainly our business here.
I have to just tell you, if you're not watching on YouTube, Carol's mouth is just agape because you don't
Catching
you
flies.
remember Beeple.
I remember Beeple.
Yeah, back in March, 69 minutes. That was sort of, I think that was,
no,
but I think it was like a real inflection point. And
Totally.
Bonnie, you can correct me if I'm wrong, but is this something that you truly believe has staying power, or is this a fad?
You know, I think I will say I think it has staying power. We've seen great curiosity from our established buyers, Tim. We've tried to introduce NFTs into a variety of categories like photography and design, and it's been met with great interest. We've also introduced NFTs into new markets, into our sales rooms in Hong Kong and in London. And I'll tell you, this fall I stood in the galleries and I had a number of traditional, very serious established collectors say, take me to the Beeple. This fall we had a hybrid work. It was the first sort of digital / physical work that Beeple had done called Human One. And all of our clients who regularly buy Picassos and old masters really wanted to see that work. And I think they're becoming more fluent about NFTs, and they're starting to see how NFTs might fit into their collections of, again, more, you know, what they're expected, art you'd expect to see.
See it and buy it, or just see it, Bonnie? Your established collectors who are used to buying Klimts and Picassos and you name it.
No, definitely they're participating, Carol. They are there and they are driving some of the prices that we've seen. It's been nice. We've had crossover both ways. Traditional collectors bidding on the NFTs, but we've also, the best part about NFTs, it has introduced 400 new clients to Christie's, and about a quarter of those have gone on to buy works by artists like Warhol and Picasso. So it's nice when we can introduce new clients to Christie's and then sort of expose them to other works that we sell as well.
Well, and I did wonder too how much it's been about, Bonnie, wanting to be be part of it because everybody's doing it. We just talked about Tom Brady. I mean, he's got a platform and definitely all in it on it with other athletes. But by offering NFTs, it's kind of a great way to cultivate a whole new group of collectors, younger collectors perhaps, right? Who may then also cross over from crypto to buying that Picasso or some other great piece of work where there's actually a physical piece of work you can hang on your wall.
Oh, exactly. And I think nowadays, I think there's an NFT for everyone. We have a sale this week, which is entitled The Birth of Wikipedia, which is actually an NFT of Wikipedia's first edit, as well as the strawberry iMac that was used by Jimmy Wales to create that edit. So, you know, those people who are interested in technology, that's perfect for them. We also have seen artists like Urs Fischer, and we've offered NFTs by Andy Warhol. So we really, it seems like there's an NFT to meet everyone's interest.
Bonnie, what are people doing with NFTs? Where are they putting them? How are they displaying them? And I ask the question, where are they putting them, knowing full well that they exist in the digital domain?
Yeah, that's a great question and kind of goes to how they've impacted, how NFTs have impacted our demographics, because our younger audiences are very satisfied to hold those NFTs and see them only on mobile devices and really show them off that way. We also are partnering with many technology companies to exhibit. Of course, we have to show these NFTs in our galleries in order to get people interested. So we're partnering with different technology companies to do that.
Bonnie, you guys more than anybody understand, though, the value of something and the retention of that value. And so what's going to be more valuable longer term? And I'm stealing a headline from the New York Times earlier this year over the summer. They recently asked a painting or an NFT of it, which will be more valuable? Which will be longer term?
I think, you know, as always, we have to listen to our market. Our market tells us what they value, and right now there's an equal interest and passion and a sense of value being placed on these NFTs. I mean, $69 million. It's right up there. It leads in the sales of any works of art ever sold at auction. So I think that's an answer. We don't have the answer to that, but I think they will play side by side for a long time.
I'll trade you a JPEG of a Picasso for a real Picasso.
Yeah, me too. Well, the thing is, I got to tell you, the conversations we have in our newsroom around this, because if it's digital, it can be copied ultimately, right?
Well, that's the beauty of NFTs, is that there really is, it's so much grounded in authenticity. We have, for example, we have a sale going on we've just announced with OpenSea. OpenSea is the world's leading NFT marketplace, and that sale is going to allow collectors to purchase the NFTs via the Ethereum blockchain. And that will assure, yes, you can look at the images and you can share the visual representation of the NFT, but Carol, if you were to buy that NFT on that OpenSea sale, that blockchain, you would be the only owner of that work of art, and that really locks in that ownership.
But you can do a digital copy, right? So somebody else could do a digital copy. Am I missing something?
You are.
Okay.
Well, you could certainly have it. You know, that's where you and all three of us could print out a picture of the Beeple that sold in March, but only the owner owns the actual code.
Right, and you know, there are pictures of the Mona Lisa, right? Posters or reproductions of the Mona Lisa all over the world, but there's only one original.
It's a great example, Tim.
I didn't come up with it. A lot of people have used that, so I don't know where it came from.
I think it's fascinating, and I just think about from your guys' perspective, and then to hear how many people are interested in it, it really is like a whole new world. Bonnie, thank you so much. Do come back. We would love to talk more with this, and especially as you guys do more in-person auctions and stuff evolves. Bonnie Brennan, she's president of Christie's Americas, on the phone from New York City. I get it on one hand, but
what I don't get is the parity in value right now that she's talking about in demand.
And I do wonder longer term, is that at some point people wake up and said, well, but that's not the Picasso on the wall.
Did you say at one point Beeple will wake up?
At one point Beeple. You know, he has a real name.
He does. We should get him, actually. We should get him on.
I live for the day when I have a nickname like Beeple.
Let's get him on
or other. All right, for Tim Stanovic and the Business Week team, have a good and safe evening, everybody. This is Bloomberg.